What's up guys, it's your boy Z. I am back again with another YouTube video for y'all. So I'm super excited about this one because we're going to be talking about the stock market and how you can be making passive income. Yep, I said it, passive freaking income with the stock market. Now, not a lot of people know this, but let's look at Chase Bank, for example. If you have a savings account with Chase Bank, they only give you 1% interest over the year in the money that you have in there. They may advertise that to you and it may seem like it's amazing, but 1% really is not that much. Now, let's look at the stock market, for example. The stock market is giving about 10% interest over whatever you invest in. Now, because of inflation, we can minus, let's just say 3%. You are at above 7%, right around 7% year over year by investing in the stock market. Now, you don't have to be this like freaking stock scientist and be like, oh, I have to invest in this new company now and this other new company now. You don't have to do any of that. You just have to know when the right time to buy and sell. And really, all you have to do is invest in the blue chip stocks. And sometimes maybe you want to invest in the NASDAQ or S&P 500. Now, the great thing about this video is I'm going to teach you how I personally invest in the stock market, what I use to know when to buy and sell, and I'm going to show you how to make passive income without doing much at all. All you have to do is understand these basic concepts that I'm going to teach you, and some of these concepts are from my ebook. So I highly suggest after this video then make sure you check out my ebook and grab you a copy, because it is going to be extremely beneficial for you in the long run. Now, let's not waste any more time. I'm going to show you how you can really make passive income using the stock market.
Alright guys, let's get started. So the first thing we want to do is go on tradingview.com. I have it highlighted here at the top, and you're probably going to want to open a free account with them. It takes like 1 or 2 minutes, super simple. I think when you first go on a website, it will ask you to create an account, and you want to create a free basic account. That's all you're going to need. Okay, once you create an account with TradingView, we are going to go to your list here. Now, you're probably gonna have a list populated. This is a custom list that I created. You're going to want to hover over and delete everything you see. Just click X and get rid of any instruments, currency pairs, Bitcoin, crypto, anything you see. Just go ahead and delete it, because we're going to add some ones that I want you to have. Now, you may have a section that says stocks, and it may have SPX 500, which is perfectly fine if you want to leave it. If you don't have that, you're going to click here on search, and we're going to type in SPX 500. Okay, now the one I want you to look for is SPX 500, and the broker information that we're going to be observing is going to be from Black Bull. So as you can see, if I hover over Black Bull, it's saying see overview, launch chart. You're just going to click launch chart. Now, once we launch our chart, it should look similar to this. On the top of your chart or your menu, you're going to see these little times. It's going to say 5 minute, 15 minute, 30 minute, 1 hour, 12 hour. You may only have 2 or 3 because you have the basic version. I'm using the professional version, and again, all you need is the basic version. You're going to click on your arrow, and we're going to want to scroll until you can get to the weekly time frame. So these menus is giving you what time frame we're going to be looking at, and that means every candlestick we are observing equals the time frame that we click on. So we are going to want to work on the 1 week time frame. So we're going to click on the 1 week. Okay, so what's happening here is each candle, these are candlesticks by the way. So from here to here, this black piece that you're seeing here is a candlestick. It's what we use to measure price on the chart. And you can see here, this is another candlestick. What's happening with this information is telling you that S&P 500, let's say we look at this candlestick from this low to this high. I'm not being super exact here, But from that low of the candle to that high of this particular candle of the week of October 30th, right? It's basically telling us price SPX went from right around 4100 to 4370. Now, that's really just how you measure the price movement of whatever stock or instrument you're going to be looking at. Now, obviously, there's more details that could be used as far as from a day trading aspect, but because we are going to be doing a longer term approach, all that information is not 100% necessary, and I'm trying to keep things very simple and basic for you guys to understand. So we just want to understand what these candles are in the most basic form, and all we're doing is to use it to read price. Now, no matter if your candle looks something similar to this, or it looks like just a long wick, which these are what wicks are, it's basically a doji candle pretty much. Whatever candle we're counting, we're going from the very top to the bottom. Whether it looks very solid like this or very thin, all we're worried about is the top and the bottom of the price. Now, some of you guys may be asking, what is SPX 500? And really that is just the S&P 500 index. This is the first important part when it comes to using my approach to make residual income with the stock market. Now, the S&P 500 is an index of 500 of the largest publicly traded companies in the United States. These companies are selected based on factors like market capitalization, liquidity, and industry representation. Okay, so that's what the S&P 500 is. So think of companies like Walmart, Apple, Tesla, Ford, things like that. Those big companies, those big public companies are all represented in the S&P 500. So the way I use the S&P 500, I use it as a leading indicator to tell me when I want to get in and out of uh, potential individual stocks. So if I was going to invest in Walmart or Tesla or Apple, one of those blue chip stocks or big name stock, I would first look at the S&P 500 to see where we are at as far as a certain price level. Then I will go look at that individual stock. Now, my secret sauce in this technique that we're going to use, I have a special chart that I look at. Now, what we're going to want to do here is we're going to want to click on this plus sign here to add another chart that I want you to look at. This is where the secret sauce comes in. So now I want you to type in S and P 500 above the 200 average. Okay. Now you should see this first one come up. It should say S&P 500 stocks above the 200-day average. We are going to click this to add it to our chart list. Now we exit. It should populate here. We click on that, and then this should come. Now, what we want to do next is go from the weekly time frame to the monthly time frame. Now this is when things get really juicy here, guys. So note how I have these two key levels identified. I have the 20 level and the 90 level. You're going to want to identify that on your chart. So hover over to the left, you'll see a little toolbox menu here. We want to come to the second one down and find horizontal line. If you don't see it, click on this little arrow here and it should give you options to find it. But you have horizontal line here. Once you do that, you're going to click and you're going to be able to draw a horizontal line at a level. So find your two levels. We're going to want to find the 90 and the 20 level. Now, the cool thing about this chart is that it simply tells us when to buy and when to sell. And I'm going to show you proof of that data here now. So notice these levels here when we are above the 90. Anytime this particular chart goes above the 90, you are going to want to start looking to potentially sell portions of your stock, okay, for profit. Now, anytime price goes below or gets really close to this 20 level, this is when it's going to be a key time to buy these stocks. Now, let's look at Apple as a clear example. Now, I'm going to identify some key buying levels for us. So, let's look at this level here. And you can see since we're hovering over a month, this is August 2011. We don't care about the day, we just care about the month. August 2011 here, guys. Okay, so August 2011 through October, we also had a low down here in October, right? So between August and October, this was a key time to be buying. Now, let's go look at that on the chart with Apple. So you're going to click your plus sign again, and you're going to want to add an Apple chart. We're going to click on Apple Inc., where the measurement is coming from the NASDAQ. Now we are on the Apple monthly chart. So let's now find August 2011. You can see here, bam. So this here is August 2011. Just going to highlight this low here. So now that we have identified August 2011, let's go back to our special chart, the S&P 500 above the 200 moving average. So it is telling us that we should be buying in August, anywhere between August and October of 2011. Now, when price gets right around here, this is showing basically March 2012, we could have sold, and then we had this really interesting high here right above the 90 level, really tagging in that 90 level in May 2013. So we have May 2013 and then we have March 2012. So let's go back and check that out. So on our Apple chart, let's look for March 2012. So March 2012 is right here. Let's identify that area here. This high. So March 2012 started here. Notice how when we approach that March and April level, that was really close to the 90 level on our moving average chart. Notice how we come close to creating a high, and a couple months later we immediately tank. So we'd be buyers here and then selling some of our stock at the high. So let's look at an example here. Now let's do a little breakdown how much money we could have made if we have bought here and then started to sell our shares at this particular high. So right around this level, the Apple stock was around $12.50 per share. $12.50 per share. Now let's look at this example. Let's say we were buying Apple at right around $12.50 per share. And investing about $1,000 and our exit price based on our moving average charts, we would exit right around $22 per share. That gives us right around 80 shares of Apple to purchase at that time. So we're going to head over to this website. You can see the URL here. This is goodcalculators.com. It gives you a stock calculator. So here I have the number of shares. You're going to go ahead and input that. We have the purchase price, $12.50. Sell price 22. Now, depending on what broker you're using, you might have some buy or selling commission. You're going to have to basically find those details out depending on the broker that you want to use to buy or sell your particular stock. Maybe I'll make a video about which broker is best to use, but for now, you're going to leave this blank. Okay, we're going to leave the CTG rate as well blank. Currency is going to be US dollar. And you can see here are our results. Okay, so net buy price $1,000, and our net sell price would be right around $1,760, guys. $60. Now, let's hover back to our Apple charts. So we went from this level to this level, which is about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right around 11 to 12 months before we got to that level. So roughly a year of holding Apple stock. Now, looking at the stock calculator, we had a return of 76% on your investment. Now, it would be a little bit less once we calculate commissions, etc., right? But roughly right around 76 freaking percent, guys. That's insane. Now, think about it this way. You put $1,000 in your savings account for JP Morgan Chase and you're getting less than $10 over a year, but you put it in the stock market and you're making $760, right? Now, you take that money out of the account and you pay yourself, whether it's half of it or three-fourths of it, and then you reinvest it back at another key level based on our moving average chart. Okay, and this is how you can continuously make passive income with my strategy, making passive income with the stock market. Now, I go in full detail, right, with other strategies that actually helps you save money and lower your risk in my ebook. So make sure you guys check my ebook out, okay? So I'm gonna give you guys one more example. Let's look at a more recent level. So right here, right around, let's call this month September 2022. So let's go note that on our Apple chart. September 2022. So let's find that level here. So we have here September, this is the month of September 2022. So we're going to identify this level here. And as you can see, from this level, we went up a little bit and then came down. So if you were in this as an investment, you invested money at this month, 1, 2, 3, 4. 4 months later, you would technically be in drawdown, okay? So it would look like you are losing money, but based on the chart, we are not getting any signs of getting out. Now, let's find out when our special chart tells us when to get out. So as the chart starts to move up and we get closer to the 90 level, right? And mind you, we are still not at the 90 level, but once we get closer and closer to the 90 level, this is when you want to start taking profits, okay? So if we look here, right around February 2023, and then we have July 2023. So let's look at that on our Apple chart. February 2023, we have a level here. And then we also have July 2023. Now, we have our buying level and our potential levels where we would be looking to sell as price gets closer to that 90 level on the moving average chart. Now, take note that both of these levels would have been great levels to potentially take some profits because we were buying way down here, right? So right around 137 or 138, right? As far as right around 137 or 138 dollars per share, and then exiting right around 157 or 158 dollars per share for this level. And then this next level, we could have exited right around $198 per share. So let's just run the numbers here. Now, running numbers, we're using right around the same amount, $1,000. It will allow us to buy 8 shares, buying at 138 per share, and then our sell price is 198. Again, we're ignoring these options here, our commissions, right, and the CGT rate. And then we come down and we can see our results. Based on that investment, we would be up 43.48%. So let's just say 43%. Again, smashing numbers more than putting money in a savings account. Now, obviously, I'm only using $1,000 as an investment, right? Clearly, if you're using more, like $5,000 or $10,000, and using that to buy X amount of shares, you're going to be making much, much, much more, right? And that is the power of the stock market and using this simple strategy to make passive income, right? This is income that you're just watching it grow over time. You're literally not doing anything besides clicking buy and sell with your particular broker, guys, right? We're not outside cutting lawn or doing extra hours at our 9 to 5 or anything like that to make this type of money. Okay? Now, in my ebook, I go in detail more about how to use your strategy and leverage your strategy even better. Okay, so make sure you check out my ebook. I give you an example of the chart in ebook and different things that you can read and use in the ebook as well. Now, another strategy that I use that I talk about in my ebook is dollar cost averaging. It's an extremely important strategy to use to minimize your risk because doing any type of investing is going to be considered risky. Okay, so now using this dollar cost averaging strategy, you will be able to lower your risk. I go in details about how to dollar cost average in my ebook. You can clearly see the chapter here if you want to screenshot it and read it, pause it and read it, right? Or even just Google dollar cost averaging. You will be able to use this strategy as well to amplify how you make passive income with the stock market. Now guys, that is my time. I'm actually going to make this video a 3-part series where I talk about the stock market. Make sure you subscribe, like, and follow me. Follow all my socials. I will be talking next about the basics of the stock market so you guys can understand the stock market a little easier and really understand how it works and what to be looking for when it comes to looking at particular stocks. Now, make sure you guys follow me, like I said, like and subscribe, and I will see you guys soon. And that's a wrap, guys. Can't wait to see you guys in my next video.